Good morning, everyone. Welcome back to the rationalinvestors.co's daily brief. We're here early in the morning. The bear is just recently awoken from his hibernation, ready to, soon to be.com. And we're making our transition to the new site. Brian is officially on vacation. He is swimming down the Danube River with Alex, and the two of them, I think, have changed the composition of the river from water to beer, and probably urine, but that's another story. I hope they're having a great time. And you're stuck with me for today. Today's going to be a short daily brief because I've got to travel. I have to hit up the airport in the next 45 minutes. So we're going to cut this thing short about 15 minutes, and I'm going to scramble to get on an airplane. But I'll be around tomorrow. Hopefully we'll see Brian as well. Julian wanted me to mention that he's got some logos that he wants to share with everyone to see if he could get some feedback as to everyone's opinion on what they think about those. So Julian's going to post those in the lounges, because now we have two lounges. We've got the traditional lounge, and then, of course, this is the Rocket Chat lounge. And I, of course, am neglecting my private messages again, I see. Yeah, I'm really bad at this, so I apologize, guys. So check those out. And Julian, I think at the end of the broadcast, once the video is over, you can post them as a comment on the YouTube comments. So anyone who wants easy access to those, or maybe you can pin those also, which we showed yesterday. You can go up to the right-hand corner here, click pinned messages. Julian's got the site feedback. Maybe it's a good idea to post that in there as well. So we can get this site into the 22nd century, and it'll be perfect for everyone. So I'm going to jump right in since we're short on time, and we're going to take a look at stocks in brief. I know yesterday I took a long-ass time talking about those. Tesla's the first thing that jumps out on my screen, probably since I didn't change it since yesterday. And this thing looks like it's still doing the same thing as it was before, if not making higher highs off of yesterday's candle. Still nothing really to do. We explored the options chain, and that was miserable for long term. So there's no play for me on Tesla in terms of options. But for a buy, it's looking pretty juicy. You still have to wait for this to confirm. Maybe we can come back down into this zone and put in a W. So let's check out my equity plays on my TradingView favorites. So we'll start with our Dow, see how he's doing. If you could throw yourself on mute, that would be much appreciated. Thank you very much. We've got our Dow chart here, and we are still in our reload short zone, and this is starting to take shape here. Of course, we're hunting M's all the time, M's and W's, and this would be nice to see, but I don't think we're going to get really nice signals. We might get lucky, and we could get a perfect M here, and in the face of this divergence that's forming, this would be a really sexy short to take. We're still waiting for those cues. We've been patiently waiting for a long time, and it'd be nice to see that come in. Same story probably on S&P. This looks a little more broken down than the Dow does. Still waiting for this to break the neckline. Same divergence. This is actually confirmed at this point. If we go down to the lower time frames, you may actually have an excuse for a short at this point, and it doesn't look like we do. The 4-hour, maybe right here. So this could be your signal entry to front run this market. Potential so the divergence came in on this dump here, and then we've got a continuation trade. If this has to make new lows to be a continuation, but my hunch is we're probably going to waffle around and maybe retest this under the neckline here. But as far as the daily is concerned, I would like to see this 2803, 2800 broken below, and then we can fire off some shorts. And I guess there's probably inverse Is there an inverse S&P? I don't know if Grim's around. He would know better than I would on that. I don't see him here. Feel free to. So Gerald says there is inverse S&P. What do you know what the symbol is for that? He's going to look that up for us. I know that we've been using volatility index, inverse volatility index. I think actually maybe he uses the dog. I think I remember that. Dog might be inverse Dow though. Yeah, Dow dog is inverse Dow. So that's not inverse S&P, but you can still probably, if you want to short this market and you don't want to play the options, this is a good way of going long it's like the opposite of the Dow. So you can see this thing's kind of been flipped upside down. You've got bullish divergence working, potential W coming in. SDS, thank you, Rohan and Ryan. That's very helpful. So let's check out the SDS because playing options on this is pretty advanced, and I don't think we have many people who are well versed in taking level 3. So let's see if I can get this long. Oh, I already have this in my chart anyway. All right, so here's the inverse S&P. So if I were to go long this just based off of buying this thing at 35 and change, I'd be looking at a target of roughly 41 to 43 if this thing can break up above 38.2, but I think we will be able to get there. That will be our play. You can see that this MACD divergence is coiling. So we've got a lot of pent up energy here. And I like these targets up here. So if you want to, if you want to look at that as part of your trading plan, I guess I probably would take this in addition to an options trade. And if you really think this thing is about to break out or break down on the S&P, you can draw your fibs all the way up here. And I mean, that would be one hell of a move. So you'd get at least your half on a double at the 50%. And my fibs aren't even all the way up here. So let's take this range, for example, and see what we get. So we've got gaps sitting at the 50% mark, and that's 68.60. So not quite a double, but you can see that if we do break above this area here, I mean, that would be a cataclysmic crash, though. So I don't know if we can entertain those ideas, but 38.2 is 60 bucks. Still a handsome profit to be making. I think if the S&P is to collapse, that would be, that would be super dangerous. And we would definitely hear lots of news about things going wrong here in the US, and that would kind of paint our picture to know that we can take that higher time frame and larger range Fibonacci retracement long. So interesting idea to chew on for everyone. Moving right along, I want to take a look at Amazon. I know that Alex has a position on that just above 1860 or 1880. I'm wondering if he got filled here. It looks like 3 or 4 days ago, made new highs, invalidated our market structure top. We don't really have anything on the internals to work with. So NASDAQ does still, or excuse me, Amazon does still look like it's not going to totally shit the bed, but you never know in this market. You've got this, I guess this is the bearish divergence that could potentially come in. This one's pretty long, so I guess I want to check out a weekly on Amazon just to see here what could possibly happen. So this would be our bearish divergence. We'd need this to confirm under here. Willie is overbought. OBV does continue to make new highs. As far as volume profile, this is getting quite filled up. I think we need to probably start exploring lower. It's not surprising to me that Alex's target, I think, was probably hit. I'd love if he could make a comment on that. And this thing is pulling back. Whenever you see these big tails after you paint your 200-point extensions or you're in your ABCD ranges, whenever you're close to your targets and you see big tails coming in, that to me is a sign that people are closing out their positions. We're getting toward the end of a move. And that's kind of what we're seeing here on Amazon. I don't know what these options look like, and I don't think I'm going to do that today because I want to make sure we have enough time to cover everything. Rohan's asking if I can look at NXPI. I'm not sure what that is, but I'll take a quick look. Those are semiconductors, so we can kind of guess how. Is this a conglomerate of different stocks? I wonder. As far as what this chart looks like, it does look kind of shitty, but it's very reminiscent of, to me, of the broader market. You see this increase in price over the last couple years here, and now we're floundering around. So if semiconductors are anything like Dow transports, we could potentially use those as like a leading indicator of how things are doing in the broader market, and they have collapsed here. So speaking of semiconductors and Dow transports, I think it's probably smart that we take a look at our Dow transports chart. And anyone who has gone through the program knows that when there's a disconnect between the Dow and the Dow transports, it means something's wrong in the market. We like to see those two move together because the Dow transports are a conglomerate of those stocks that represent the inner strength of the market, like your Boeings, like your other strong names that really contribute to the Dow. So what we're looking at here is in the blue line, we've got our Dow transports, and in the red, we've got our Dow. And it doesn't look like the Dow transports are as toppy as the Dow looks. So this is a case against the bear, but not necessarily a strong one. It just shows that we probably don't have the strength just yet to break down completely. But this is just a way of assessing the health of the market, and it just doesn't have that same toppy pattern as the Dow does. So that's interesting to see. As far as, yeah, so that's interesting. All right, moving on. Any other? I think we have to comment on the dollar today. It looks like the dollar. Oops, let's close this and bring up our DXY chart. Let's see how Mr. DXY is doing. And he's just bumping right along, probably trying desperately hard not to break out and not to break down. This looks like I guess we could probably draw a very crude trend line off of this low and off of this low and extend this. This is kind of iffy. This wick made a new high, so I kind of can use it. It's not the strongest trend line in the world, so don't pay too much attention to this. It's just going to give us our guide for the current range that we're in. And we are playing along this line here and bouncing higher, but at the same time, we are in a downward channel as well. So we could probably take our channel tool and take a look as to where this thing would possibly break out. And I mean, you could just draw a rough triangle, and I'll just do that here with our trend line on the top end. And you can see we're bouncing against the top end of this line. I think a breakout above this level, we're going to retest these highs, this tail here, and that'll push gold lower. And interestingly, gold is suffering as the dollar goes up. And if we do close at this level here, this would invalidate our potential market structure that came in. Although it looks like 3 days ago that was invalidated anyway. So gold still isn't giving us our play. I still haven't been able to get in on this either. We still haven't gotten our divergence to come in. If you listen to some of the podcasts and some of the bigger names speaking about gold, everyone is looking for a bounce here. And you all know in this community what happens when you're looking for a bounce. Unfortunately, it is the opposite. So if everyone's looking for this thing to go up, we're probably going to continue back down. And any targets that you're looking at on the downside, you just continue our fib retracements, and that looks like it's 1175 to 1200. Or they could just make this really messy. They could try to do a stop run below 1211 and then reverse this thing higher. That's certainly not out of the question. If you did take this trade, you're going to have to obey your stop pretty closely and just look for potential FU runs. This isn't going to be easy trading on gold because, again, it looks like everyone else is eyeing this trade and they're all looking for a bounce. So that kind of sucks on gold. I know yesterday Julian was mentioning HMNY. That's our MoviePass name. and they went belly up, I believe, or at least they closed up their MoviePass program, and they're down another 50% today. It's like every time we look, they are on the decline, and this thing is just dying 1,000 different deaths. I can't advocate buying this thing just yet. I don't know what the news is. I don't know what the plan is. Maybe they're going to add a Q to this thing, which would call it bankrupt. Whenever you see a Q next to a name, that usually means that they are, it's not bankrupt, but they've been designated as a big problem. So this is probably going to get that designation, and it's going to go sideways a very long time. But the funny thing is that this looks just like an altcoin, and when everyone's selling and the blood in the streets, that's when we all should be buying. But you got to wait for your structure, wait for your signals, and maybe keep an eye on this as far as what happens to the MoviePass name going forward. Really crazy. What else should we look at? Probably should look at the VIX before we depart. And so this has broken out. Yesterday's candle action did bring us to the neckline and a little bit below the neckline. And today we're bouncing back off of that and using 13 EMA as support. And I still haven't gone in here and bought my calls, and maybe I'll have time on the airplane today, but probably not. Hopefully this thing doesn't escape without me. Apple is probably something we should look at too. This thing is, yeah, this made new highs today. I wonder if they announced their iPhone earnings and they were higher than what analysts were expecting, because to see that kind of move, that looks like some news that wasn't anticipated. So Apple stock clears $200, putting in $1 trillion in market cap, yet failing to keep Dow in the black. And that's what we're seeing. So what's this headline here? Apple earnings show why you can expect more $1,000 phones. Great. Thanks a lot, everyone. Everyone who's buying this stock is now perpetuating the idea of super expensive iPhones that used to be subsidized by the cell phone company. I mean, I remember when I was buying my cell phones, they'd give you a new 200 or a 2-year contract you sign up for, and the phones would cost $200 to $250. Now you're paying like $30 a month over the course of like 2 to 3 years. And you're paying for the whole damn phone. It's like they changed the game on us. And it's because we're all willing to pay for this shit because we're so glued to these stupid phones. I mean, I love them to death, and I probably don't know what I'd do without them. But good Lord, what a pain in the ass some of these things have become. And the price tag on them, it's like, are we really getting more and more functionality for the price that we're paying? I mean, sure, there's all kinds of new fun gadgets that just force us to be addicted to our cell phones. Oil looks like it's down again today. Grim's probably still in his bot. I think he's going to be in that bot once his consciousness gets uploaded to the internet for hundreds of years. I think he'll still be in a bot. So I don't think we ever have to worry about him missing his target. Apple's home run and Facebook whiff show wisdom of staying invested. Yes, thanks a lot, Market Watch. Please perpetuate the retail public never taking profits and getting hit with a crash. That's just really great, great opinion piece here. So nothing else really popping out here on our Market Watch, other than the Silicon Valley's favorite sneaker company will now sell eco-friendly flip-flops. Woohoo! I don't know about you guys, but I've been waiting for my eco-friendly flip-flops for years. Wonder if this is even a publicly traded company. Allbirds. Let's see. Maybe we can pull up a stock here. This is probably way too late to get in if this is even publicly traded. It's not. All right. I'm pretty much done here in Stockland unless anyone has any more requests. All right, we're done. We're gonna move to crypto. Crypto. Who wants to do the song? Do we have Rob? What about you, Josh? You want to sing? All right, I'll sing. I don't want to sing. I think I can't sing. I don't have a good singing voice. I think we could just do, Bitcoin tastes great. Bitcoin can't wait. Yes, we got someone to jump in. All right, let's see. Where are we? I'm on the wrong chart. We've got to go to Bitcoin. Let's see what's happened. Oh my God, this thing got wrecked yesterday, right? This collapsed into, so let me see, hourly chart. Let me get my bearings because I'm kind of confused by this right now. All right, why does this look like a double bottom potentially forming? Oh, right, this is hourly chart. Okay, so here was yesterday's action. We had this M on the hourly break us down. We made new lows. This was 8 o'clock in the morning yesterday, and then 12 o'clock was our daily brief. We looked like crap on Bitcoin on the lower time frames, and sure enough, we still made lower lows. And we dumped again after New York closed and into, I guess it was Asia open. As Asia opened up, their kill zone, they knocked this thing down short as well. I don't think that this is a completion of any kind of like A, B, C, D pattern, but to me, this move downward was getting really long in the tooth as I was watching this thing come off. And this huge dump here, I mean, whenever you get one of these clumps here in MACD, you always have to expect that this thing's going to probably sell off again and put in a lower low and set up your divergence. Now, we have set up that divergence. The problem being is that we haven't put in our clean market structure. We haven't gotten a signal for a long just yet. And this MACD is starting to get a little long in the tooth. You all remember that we like to count our 4, 8s, and 12s on the MACD before we see a change in direction. And right now we're at 9. So potentially 3 more hours. I really want to see this thing break out, make a new formation, and then continue our move up. But there looks like there's accumulation going on right now, and the 13 EMA is acting as strong resistance. We haven't been able to break above that at all in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. That's not good. I don't like the way this thing looks. I don't like how Willie's recharged out of oversold and now has permission to continue going down. I don't have any bearish divergences, but the fact that this bullish divergence didn't continue, and this is a huge range here that we could potentially be testing to the downside. I'm fearful that this gap needs to continue being filled in. And once we do that, we're going to probably have to end up in this POC here. But remember, we talked yesterday about all of the gaps on this chart on the volume profile and how anemic this thing looks. And to me, that just means that we need to spend time filling in those gaps. We've got, I'm going to actually use the airplane. Dave Davis uses the airplane for the MUOX, and I've always liked using the MUOX, but the airplane just looks so cool. Where's the damn airplane? Oh, here's the Linux guy. Ah, here's the airplane. All right, so we can see you got a jet fighter that belongs in there. You've got another jet fighter down there. And then here's the bottom of value all the way down here. And if we want to test that bottom of value, that's the original breakout that we saw. That's going to suck. I mean, it's going to test your patience. It's going to test your discipline to stay in your trade if you were even down here. To me, that would be catastrophic if we had to go back down and test that area. That to me means the ETF was denied. No good news is popping into this market. So potential targets, at least for the day or the better part of the week, it looks to me like we still need to come into 38.2. This gap is currently being attended to. This parabola, we like to see parabolas on the volume profile, and this does not look well filled in. This would kind of be where a lot of business needs to be done. So I think, unfortunately, we need to put the kibosh on the bull enthusiasm for now. Surely an ETF approval will change that. That's the only thing here that will change and put us into a bullish poised market. For now, these are certainly targets to be tested. 38.2 for a stop. How this resolves going forward will dictate the rest of the trade. This is the most clean M I have seen on the dailies come in for a long time on the top. This was broadcast so well. And if we fail through 38.2, I still think we have an excuse to go short and test this $7,000 handle. To me, it looks like we're probably going to end up going and retesting this original breakout neckline, which is Mountain Man. So that's the 6,800 level. I think it's the same on Finex. Let's take a quick look at Mr. Bitfinex and see how our levels are lining up there as well. We have our daily chart, 38.2. Okay, so 61.8 is 6,800. So we do have confluence. It's going to be interesting to see that spreads have maintained their premium. You can see down here, 38.2 was tagged by Finex, but OKCoin did not get down there. So that to me means spreads are still strong. I think there's still a lot of hopium in the market that this ETF will be approved. That's probably the only thing propping this damn thing up. There is a caveat to that, and this is really interesting and confusing as hell, and I'm going to bring it up, and that is the OK Exchange is, I really think OK Exchange props this market up. I think a lot of trading is still predicated on that price movement because I do see price movements coming into that market before any other market. Now, the problem here is that someone started a really interesting thread. You heard me yesterday talk that the OK Exchange #1 contract holder was $460 million long. Well, he got liquidated on these moves downward. So whenever you get liquidated, what happens is you have to have your position filled by another player, by another investor. It's like we're all playing a video game here. Brian's totally right. You have to have that position filled. Otherwise, you get what's called socialized losses. And right now, according to this guy's research, which I have not verified, and I don't know how reputable this guy is, but it seems like the community in general is in agreement with what he's saying, but is also very confused. There are very few people, myself included, who understand this. I don't completely understand how these socialized losses work, mainly because OK Exchange keeps changing the rules on them. So at this point, there are 950 Bitcoin that are quote unquote system losses. And when you have 950 Bitcoin unfilled by another investor or another, whatever you want to call them, let's just call them players, because I think we're all at the casino, so they're all players. Fuck it. I think that when you have, I don't think this is true. When you have that many socialized losses unfilled, what it means is that everyone else who is a player on this market, who is waiting for Friday's contract or profit delivery, we share the losses. So anyone who's made a profit on OK Exchange, you now have a significant portion less of your profits because all of those losses get distributed amongst us, just like the name sounds, socialized losses. Now, the reason why I said that OK Exchange keeps changing the rules is because the last time something horrible like this happened is they actually injected 100 Bitcoin into their insurance fund. Now, right now, they only have 10 Bitcoin in their insurance fund to cover things like this. But historically, they have bailed the markets out. I think this is a big issue here. If I understand this correctly and I understand what this guy is saying, it's probably true that this market is in trouble and that OK Exchange is going to have to rescue them to some degree. I don't know how this is going to play out. It's going to be fascinating to watch, and it's going to be horribly painful to watch my profits get rolled back from all of the trading that I've been doing. That to me makes a place difficult to trade at. And that's really unfortunate, but that's going to be what I'm watching closely. So if you do have profits on OK Exchange, you need to take a look at this thread. You need to understand how these work, and we need to see what OK Exchange plans on doing. I'm just going to scroll through the comments quickly here to see if there's any new developments since last night. Distinguish between what currency? No, it doesn't look like there's anything on here. So I guess there's clawback. Yeah, it's funny. If you were wrong and long the market, you lose. If you were right and shorted the market, you lose. I don't think they're going to let this happen. I think OK Exchange has a lot of customers. They have a lot of reason to keep this thing going and keep their customers happy. I mean, they inject a lot of volatility into this market. So it's just going to be a very key point to pay attention to, especially for me. All right, so back to technicals. Julian's telling me I need to load the .com lounge. All right, what am I looking for? That looks like maybe wrong Thomas. Anyway, okay. So here we are, 38.2 hasn't been tagged yet on OK Exchange. That's still being propped up. And I'm wondering if, because what happens is when this thing sells off, when someone gets liquidated, I usually notice that big individuals, big players that want to have their positions filled on the opposite side. So if someone went long and they got liquidated down here, what's going to happen is someone else wants to go long and buy their position up. And that usually happens. But this person was liquidated back, I don't even know if this thread says where he was liquidated. It says current prices were 78.50. It doesn't say where his liquidation is. And then if you want to follow along where this guy was adding to his position, here's some Twitter feed on him, whatever. All right, essentially what happens is when you're liquidated, the market kind of stays in that area because these big players are looking to fill their contracts the opposite direction because there's so many available, and it adds liquidity during a liquidation event. Go figure. I don't think that the market has gone to this point because it's kind of magnetizing price. It's keeping it elevated. And to me, that is artificial. I think that that may be their bots, their volume liquidity bot that is injecting false volume and volatility to keep this market kind of propped up and not move away too quickly from that giant position. So I think we have until Friday morning Asia time, or Thursday 3 o'clock in the morning East Coast time, when that contract rolls over and those socialized losses kick in. So this is a tough situation. If OK Exchange does want to manipulate this market, they can push this thing back up to fill that guy's position. Now, the way that I typically trade, and this is going to be very interesting, is that the neckline here probably corresponds very closely to where this guy got liquidated. Now, what do I like to see after we have a breakdown of market structure? I like to see a retest of the neckline. That would correspond really well with filling this guy's position, and that would prevent the socialized losses. Now, is that an engineered move? Is that OK coin manipulation? Or is it just normal market oscillation? The world will never know. But you can keep your conspiracy theories and guess as to what that is. But I think we have to keep that in mind, especially on the daily chart, as to what could potentially happen here for that neckline retest. But let's take a look at our lower time frames just to get a couple cues as to what could potentially happen. 4-hour chart, we made new lows on the MACD. Willie is starting to get to the, nope, not even close. This is not good. So Willie's not stupid yet. Maybe we need to draw our ABCDs at this point and see where we could potentially land on the 4-hour. That's probably why I was hesitating on the hourly. I didn't see it as clearly. So this is probably where our target is, mainly because I think that the breakdown on this happened on the 4-hour as well with our divergence. We didn't get that on the daily. So to me, the trade is still on the 4-hour. So where the hell are we looking for targets? Thank you, Mr. Fibonacci levels. Do not go across time frames. So hopefully these lines stay here if I go back to the daily. And they do. So the higher time, look at, good Lord, is that cliche or what? So ABCD paints us right at the original neckline breakout, right at Mountain Man, right at the second gap. This is eerie. Like, it's kind of gives you shivers down your back. Like, how does all this shit line up so perfectly? It's just incredible. So that to me looks like where our target is going to be. And with all these gaps here, this isn't surprising now that we have our market structure top, now that we have our lower time frame divergences working. Willie isn't quite stupid yet. I think that the market wants to suck more people in long to liquidate. And I wonder if OK Exchange is going to use anyone who's gone short here to try to liquidate any players who have gone short 20x leverage, liquidate them up here. And actually, that's a great question. I'm going to grab my calculator and see if that liquidation level is in that neckline. So we're at what? The lows here were 76.50. So let's get this calculator here. And anyone who doesn't trade on OK Exchange, what you can essentially do is you go into their platform and they have not only a liquidation calculator, but they also have profit target calculators, and they give you all kinds of cool information to help you frame your trade. And that's what I'm going to do right now, because I bet that this corresponds to the 20x liquidation level. So calculator, if we type in here 76.50 on the short side, so open price 76.50, leverage at 20x, 7650 on the short side, calculate, let's go do 200 contracts. So our liquidation level, no, this is wrong, fixed. 79.68 is liquidation. Holy shit. 79.60 is your liquidation level at 20x. And as far as 10x is concerned, 76.50 contract 200. We're going short, 10x fixed. And that liquidation level is 84.06 if you went 10x long. So that's back up here. I doubt we're going to get back up there, but 7,900 is right. I mean, that's not even into these tails here. So that's an easy target. Man, so they want to fuck over the market here. That's one way they could do it. Is push this thing higher into this potential dump that's coming in again. But that would make us move our ABCD targets. And then we could probably set up, I don't know if we can set up a bot off of these levels just yet, but interesting to see. If this does go sideways for a bit and set us up for another trade, my hunch is we will get a nice entry here. So I think it's wise for us to remember that the trend now is downward, and any long setups that you take are going to be on a lower time frame, and you have to be aware that you're, as Julian says, swimming against the trend, and that's not swimming upstream against the trend, and that's not something we want to do. I think that covers us quite well here on Bitcoin as far as targets and as far as all the fuckery in OK Exchange. I guess I'm going to move on to Litecoin here. Litecoin, I mean, the problem is there's no decoupleization that's come into this market just yet. Litecoin has hit its target, interestingly enough, of this bigger range. We've come down into the $79 range. So again, yesterday and the day before, I said if you're of the camp that believes Litecoin leads this market, maybe we can get ourselves a double bottom. Is this a potential divergence? Wow. So this does have potential bullish divergence written on it from even back. No. So from here, this didn't make new lows, but you could go from here to here, and that could be a potential divergence. I wonder what this thing looks like on the daily then. So the daily, oh, that's right. This did have a divergence yesterday. This was a bearish divergence though. Boy, is this confusing. All right, so you've got this bearish divergence that's working, very weak higher high on the candles, lower lows in the MACD. Okay, fine, we're playing that out, but this looks like, you know, a super dangerous position to take, but just like the perfect position, right? You want to be buying against original breakouts. You want to be buying at 78.6, the bottom end of ranges. This 78.6 area here is probably the wise area to take. So I'm going to delete this fib here, and I'm going to move this one over just so that this is more visible here. And 78.6 of that range lines up closely to $76. So I think if you wanted to take shots, and I think that's where I'm going to take my shot on Litecoin, is I'm going to be buying 78.6 and probably sprinkling a couple bids down around this area here, because these candle bodies probably want a little action. That would kind of suck just because it would invalidate this breakout, but this market needs to clean itself up. So I think what's going to need to happen is we're going to come down into this level. The market's just going to sit on its hands, sit on its knees, like, please, Mr. SEC, please, can I have an approval, please? And if that comes in, then great. Then this thing can bounce back. But That's what this whole freaking space is predicated upon right now. Make no mistake about it. These moving averages are about to cross. If we do bounce back up, I like to use that as a potential short. That to me is classic range trading. That would be fun. And that kind of bounce would correspond quite well with our Bitcoin thesis that if we do need to bounce and liquidate those 20x shorts that went short down here, and we need to fill Mr. Irresponsible long $460 million. Good Lord, why do you do that on an unregulated exchange? I'll never know. That corresponds to our thesis there. So we're starting to get some confluence across these markets. Now, Ethereum, I kind of was disappointed with the way that this broke down. I had knife caught this long here, and we bounced a little bit, but we didn't get close to my profit targets. I think maybe just 1/4 of my position might have gotten filled on that bounce, but I ended up getting stopped out down here, and this thing just continued its dump lower. So Ethereum just cannot catch a break through this thing, just keeps getting killed, and it's rough. If you're an Ethereum trader, if you're, you have all your funds in here, it's not a fun trade to be taking. It's not a fun place to be. As far as where we're coming into levels, I mean, look at this. Brian's tail wants eat. This was way back in end of July. Brian said this tail needs attention. Well, we got some attention. I think we actually drew this probably back down here. We got kind of close here. It looks like we need some candle body closing down in this area. So that just means Ethereum has more to go down. And Ethereum's liquidation level, if you had gone long from that 440 area that we were consolidating on, that liquidation level is like 408, 412 or so and change. And that looks like it's going to correspond to, wow, way down below here. So this is our original breakout. This was end of June. This was when the market started looking really bullish. We were talking inverse head and shoulders, and this thing finally blasted off, and everyone's like, woohoo, we finally got out of the bear market. Well, boo, we're back there now, although Willie is kind of getting overbought, or excuse me, oversold. This move is probably a little longer in the tooth than the Bitcoin move. We are at 78.6 of this whole range. So, I mean, any stabs down below here looks like they were getting bought up. This potential W is here, but this also looks like it's kind of fractally looking. So really, really dangerous spot. If you want to take your shots, I'm going to take another shot here. That's going to be my plan here. But I think this time I'm probably going to wait for my W to come in on the 4-hour and try to hunt any kind of bullish divergence that will continue. We already had this bullish divergence. I just need this damn thing to break above the 13 EMA. Same problem as Bitcoin. That's because all of these markets are coupled together. So we got to see this thing break up on the hourly, and then you can hunt your hourly longs, and then probably your higher time frame shorts for the rollover. That's going to be my plan going forward. So I got about a minute or two here before I got to leave. I'm going to share just one new, actually there's one more thing that I wanted to cover, and that's Brian and I keep watching this Ethereum Bitcoin proxy, and that thing just keeps making lower lows. And I think it did that yesterday before the continuation dump. So let's see what this thing looks like now. Maybe we can get another crystal ball type action here. On the hourly, this has bounced off the lows. It sure doesn't look bottomy. There's no divergence to work with, excuse me, except this bullish divergence here that's confirmed. And you've got like this loose looking market structure, but I want to see this high broken above before I get too excited. Higher time frame, what does this chart look like? Yeah, interestingly, we didn't put in new lows since yesterday's dump. So this still does look pretty emmy. This is, our bullish divergence that needs to confirm above here. Daily chart, same thing probably. Yeah, didn't make a new low. So that's encouraging. If you ever wanted a little bit of good news, it's probably like the smallest morsel you could get out of this market. But yeah, if you kind of look at the way this is dumping, the what would you call this? The slope of the decline here seems to be declining. So that's good. So the slope isn't as downward focused as it was before, but that means nothing. All right, so potential news here. I've been meaning to share this news article for a while, and that is there's two here. The first one that's the most important is Mike Novogratz. Everyone's familiar with that guy. He is the guy that was going to launch his fund, his Bitcoin fund, back in December. And he goes, you know what? I don't like the way this market looks. And everyone's like, what are you talking about? Everything's going to new highs. There's so much money coming in. You're a fool not to go in now. And he's like, it's just not right. Fuck it. Sure enough, market went down and he looks like a brilliant dude. He is now launching his fund. It's called the Bank Galaxy Digital. And they're starting trading August 1st, but it's only available on the Canadian exchange. So any of you guys in Canada who are interested in piggybacking on this guy's fund, the ticker is GLXY, and that's actually today. So let's take a peek and see if this thing's already trading. GLXY on Canada. So this thing launched at, oh, this is going to be just like an altcoin. The thing's going to have a huge green dildo showing up, and then we're probably going to go on the decline. Oh, wait, so this thing might have launched earlier? Is that possible? Huh. I don't know what to make of this. What's this article say? And that's also delayed. So the TSX through a separate vehicle, Galaxy Digital Holdings, under the GLXY. For Galaxy's founder, former Goldman Sachs partner, yada, yada, yada. So this is basically a proxy of their fund. This is without 2 years of audited finance. Yeah, so they had issues IPOing in the US because they didn't have 2 years of audited financials. They were able to like do some funky stuff with shell companies, and it's all kinds of magical lawyer stuff that has to appease regulators. So this is an interesting development in Canada if anyone wants to go and check that out, TSXY. The next news that I want to share, and then I got to get the hell out of here quickly, is that Vietnam banned Bitcoin, banned cryptocurrency. And this was like, I think last week. I've been meaning to share this damn thing for a while. But after they banned cryptocurrency, there's also another article that came out that a well-known mining firm in Vietnam, or maybe it was an ICO, something like that. But the guy basically ran away with $35 million of people's funds after these Vietnam bans happened on cryptocurrency. So this was on July 27th. So this was the beginning of the week. But essentially, they've just, quote unquote, SSC banned public companies, securities companies, fund management companies, and securities investment funds from taking part in the activities and required them to obey legal regulations on AML. That wasn't the quote I was looking for. But it looks like this is already in addition to ICO bans. So anyone in Vietnam, if you wouldn't mind commenting and letting me know what this means for you, I'd be really curious to know. I don't think the market's dumping on this news, but certainly not helping anything. And then that $35 million heist is just icing on the cake. Like, why don't we just kick a dead horse while it's on the ground? Really sucks. All right, so I'm 2 minutes after. I got to get the hell out of here, catch my plane before it leaves without me. Don't forget to follow this market based on what your plan says. Play from a position of strength. All the best, and bye from the bear. See you tomorrow. Bye.